This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion. The Bankman has arrived. Like so many scandals in most of my adult lifetime, and I'm going to name a few, I might not remember them all. Enron, long-term capital management, the dot-com bubble, the Big Short, Madoff, and now the Bankman. What a list. Now, I have a unique perspective on the Bankman. I don't know everything there is to know about crypto like I really give a shit. I don't have to know everything there is to know about high finance like I really give a shit. But I do know something about the price. And the price is a magical factor. It reveals so much. And all of those names that I just rattled off, something very interesting about the price. Price relative to the scandals and the people that were trading at the same time who are not part of the scandal. Just regular people putting their money at risk, trying to make a profit. One of the things that I was fortunate to stumble upon early in the 90s was the idea, and especially in the futures markets, of a winner and a loser, a zero-sum game. The winner takes what the loser does. Now, I first saw this in a German metals firm that was trading crude oil futures, I think in 1993, and I'm sure I'll mess up the pronunciation of this German firm, but I believe it was called Metallgesellschaft. Don't laugh at me. But when I saw that firm and I saw their trading implosion in 1993, trading crude oil futures, I eventually figured out that there was somebody on the other side. Of course, there's somebody on the other side. It's a zero-sum game. So this German firm was losing money, and I was able to see pretty easily that trend-following traders were on the other side. Now, trend-following traders had no idea what this German firm was doing. They could have cared less. They were just looking at the price. They didn't know who their opponents were, so to speak, in the market. I mean, it's possible that somebody whispered to them that their opponent was this German metals firm that was trading crude oil. But that would not have helped the trend-following traders. They still would have had to follow their system. And in this case, they did, and they made a ton of money. And the second time I saw the zero-sum game in action was the Barings Bank fiasco. Nick Leeson, you've probably seen him in the movies if you were too young. If you're old enough, you still remember. He lost all the money for the Queen's Bank trading the Nikkei out of Singapore. Well, there was somebody on the other side of Nick Leeson. Remember, zero-sum game. Winners, losers. Nick lost. Barings Bank, the Queen's Bank, goes under. John W. Henry, a trend-following trader, plus many other trend-following traders in the first quarter of 1995, made a bloody fortune being on the opposite side of Nick Leeson. John Henry made such a bloody fortune, he bought the Boston Red Sox and the Liverpool football team in the ensuing years. You see, it's kind of like a credit card or a bank transfer. The money goes from one to the other, one to the other. Now, it's through the mechanism of the market, but again, winners, losers. I saw this again with long-term capital management. Summer of 1998, another hedge fund goes under. Wow, that's really interesting. Trend-following traders made a ton of money at the same time. Long-term capital management losers, trend-following traders winners. You see how this works? Or you see the questions you should be thinking about when a guy like Bankman arrives on the scene. Now, I will have to profess my bias. I never followed this guy Bankman until the last couple weeks. I could have cared less. I remember seeing a picture of him on stage with Tony Blair and Bill Clinton, and he was dressed like a fucking troll in shorts and a t-shirt. a disrespectful idiot, plain as day. But hey, I'm just one voice, Mike Covel. And who was I to say that Sam Bankman fried, that his money was not real and he wasn't really worth $25 billion at that time because the world was telling us he was worth $25 billion. So I might not share the politics of Bill Clinton, but if I met the former president of the United States or Tony Blair, former PM of the UK, I would be respectful. I wouldn't dress like a fucking piece of shit, which is how Sam Bankman dressed. And I would say that's a sign. I would say that's a sign of something not right. When you see a 30-year-old man walking around with female boobs, essentially, dressed like that, acting like that, talking like that, and then you dig a little bit deeper and you find out who the parents were, who the brother was, who the girlfriend was, who the girlfriend's father was. You start to say there's something really interesting with Sam Bankman. And you start to say, gosh, this guy really donates a lot to one particular political party. That's interesting too. And look at this, somehow or another, he's involved in Ukraine. Wow. And on top of that, the brightest, smartest venture capital firms in Silicon Valley basically had an orgasm over how fast they could give money to the Bankman. I mean, all that stuff is kind of the soap opera stuff that everyone's talking about, right? I just gave the greatest hits of the Bankman soap opera. Oh, there's one more, the meme that I saw, which is so great. It's that meme where there's a room full of lizard people sipping cocktails, and the caption says something to the effect of, wow, let's just name the next one Bankman, and they're all laughing. Some truth to that, huh? Maybe we are living in the simulation when the Bankman is now fried. But there's a more important issue here with the Bankman, and it's how I led off with the trend following examples. Now, crypto is something different. It's not major liquid exchanges. Clearly, a significant portion of the crypto world are scams, Ponzi schemes, etc. In fact, there's this great video of the Bankman talking about how he takes a box and he gives the box a market capitalization, just an empty box, let's say 20 million. Then people put their money into the box and the market capitalization goes up. It's actually not too dissimilar to the dot-com bubble, but at least during the dot-com bubble, they had to pretend they were running a business. They had to pretend it was a business. They had to do the IPO roadshow and all the other nonsense. I mean, I'm sure a lot of those people knew that all those IPOs during the dot-com bubble were scams too. But give the Bankman credit. He got rid of the IPO process. He got rid of the roadshow. And the Bankman just went straight to, here's an empty box. It has no value. I shall assign a value of 20 million. You put your money into the box. The value of the box goes up to maybe a $500 million market cap or a $20 billion market cap. And so then Silicon Valley's best investors, all these venture capitalists, were happy to give the Bankman money. He was happy to transfer it somewhere. I'll get to that in a moment. But think about this scam with the Silicon Valley venture capitalists. They take money from pension funds, let's say firemen, teachers, and those people don't know where their retirement money is going. It goes to some venture capital firm. The venture capital firm thinks they found a founder with a good idea. They give him money. They, quote, scale up, hire a bunch of employees. They attempt to sell their product, but there's no bites. So then what do? They start to spend the money they raised on Google ads and Facebook ads, and maybe they can make it look like their fake product is a real product. And then once they show some, quote, profit by spending the money from the firemen and the teachers, then it's time for another round of venture capital. Then they give the Bankman more money. And the process goes on. Why do Silicon Valley venture capitalists participate in something like this? It's so opaque, with no transparency, where no one knows what the fuck is going on? Because it's a great business. If you can manage billions upon billions with a management fee, perhaps an incentive fee, you're going to be making millions yourself. It is also a Ponzi scheme, a big fucking scam. Now, bear with me for a second. I'm still outlining what I would call the soap opera pieces. I started this podcast talking about concrete examples of zero sum. Now I'm explaining Bankman and the whole process that's going on there. But what's the real lesson with the Bankman? The real lesson is, where did the money go? Where did the money go? We can read all kinds of accounts about Bankman's exchange or his bank and his trading firm, quote, Alameda. But the money went somewhere. Now, in the futures markets, you've got some regulations, so you can have some faith. But in this case, the Bankman says that he lost the money. At least I think that's what he's saying. The money's gone. They're in bankruptcy. Now, this would not have been a case where trend following traders were on the other side, because these are not liquid markets. They're not real exchanges. I mean, these exchanges have been going bust all over the course of 2022. But the money had to go somewhere. It went to somebody. Somebody was on the other side of the Bankman. Now, who was that somebody? Well, in the world of crypto, where you don't have so much transparency, where you really don't know what's going on in this big scam, anybody could have been on the other side of Bankman, including, why is it not possible to say that the Bankman was on the other side of the Bankman? I sound like I'm talking in the Dark Knight movie or something. The Bankman. Like, sound like the Joker. The Bankman, the Batman. But why is it not possible in this world, not the normal world where I give those examples to begin with, but in the crypto world, why is it not possible to imagine, or is it not one of the possibilities, that the Bankman was on the other side of the Bankman? Wrap your mind around that one. I think it's a interesting possibility. Now, that's just conjecture. I have no idea if that's true, but the money did go somewhere. Somebody has the Bankman's money. And that's the only question worth asking. That's the question that drove me when I was doing my early trend following books. Where did the money go? Oh, that's interesting. The money went to trend following traders who had good strategy to play against the scammers. Now, back to the Bankman, where his money possibly went. Maybe we'll figure it out. Maybe we won't. But it went somewhere. The money always goes somewhere. Now, let's take a step back. I just lay out this scenario over the last few minutes. Let's step back and look at it from 35,000 feet. The average person. What benefit do you get from talking in detail about long-term capital management? What benefit do you get by talking about Enron or Madoff or the Big Short or the dot-com bubble or the Bankman? What do you get from it? I guess it's fun. I'll admit that. It's fun. It's theater. It's entertainment. You want to find out when these scumbags are going to do the perp walk, when they're going to be taken away in handcuffs. And you want to imagine that when they enter jail, they're handed a soap on the rope and told to mind their backside. So I guess we all, have fun with that. But it doesn't do you any good. You don't make any money from this. You don't make any money from a detailed understanding of all of these scandals. It doesn't work that way. You make money when the scandals happen by having a strategy that didn't know the scandals were about to happen. You got that? You make money when the scandals happen by having a strategy already in place that didn't know the scandals were going to happen. Ladies and gentlemen, there is only one strategy in the world like that, and it's called trend following. Because if you're trading your trend following strategy, you did not know that long-term capital management was going to happen. You did not know that Barings Bank was going to happen. You didn't know Sam Bankman was going to happen. So why is it relevant? It's not relevant for the average person. Today is my impassioned plea that if you want to be successful, if you want a chance at some above average money, then witness what the American government helped to engineer with the full cooperation of everyone around the world, but to witness what the American government engineered since March of 2009 till today. One big fucked up market. How many people believed with their money and their heart and their soul that they were getting rich until now? They had it all figured out until interest rates went up. They had it all figured out until bonds collapsed. We're entering an interesting time period. Maybe the Fed will, quote, pivot. Maybe they won't. Either way, you have to be ready with a strategy to take advantage of the movement of liquid markets. This can be up or down. You can be long or short. But this is the game. This is the only game that matters. Everything else is a soap opera. Yes, I find it hysterical that Sam Bankman is a troll. I find it hysterical that he's walking around as a 30-year-old man with boobs and a pot belly that says, I've never exercised a day in my life. And I find it funny that he was actually banging his CEO, who's one of the most unattractive, I won't say it, that I've ever seen. So yes, when these kinds of people that have acted like this with such arrogance, and look, this FTX stuff was highly risky, but I'm sure some average Joes, probably some normal people, have lost a lot of money. That's unfortunate. But Ed Seykota, the famed trend-following trader, does have an expression. And it's an expression that is always timely, always accurate. And I'll paraphrase. Everybody gets what they want. So if you are losing in FTX, if you are in the middle of being fleeced by a scammer, you're getting exactly what you want, because not everybody was getting fleeced by the Bankman. Mike Covel was not getting fleeced by the Bankman. Tom Basso was not getting fleeced by the Bankman. Larry Hite was not getting fleeced by the Bankman. Now, there were probably some very bright people, supremely accomplished, who did get fleeced by the Bankman. Maybe they had a venture capital type strategy where they thought, you know what? I'll give the Bankman a small percentage of my net worth. And if that small percentage goes belly up, that's fine. It was a diversified bet. I knew what I was doing. I don't know if the Bankman is real or not. I'll take a small bet on the Bankman. I understand. There are many ways to look at this, but ultimately I come back to the Seykota point that I just made. Everybody gets what they want. And at the end of the day, all you have is price. We can talk to the cows come home about the soap operas of the Bankman. I love saying this, the Bankman. What a scumbag this guy is. Oh, and oh, by the way, have you caught this news too? Michael Lewis, the famed author, who I really have enjoyed some of his books over the years, enjoyed Liar's Poker, enjoyed The New Thing. I enjoyed Moneyball. I enjoyed The Big Short. But it turns out for the last 6 months, Mr. Lewis was embedded with the Bankman. Now, of course, Mr. Lewis has left-leaning politics. The Bankman is extremely far left. In fact, the Bankman's brother had a nonprofit organization before the pandemic about how to prepare for pandemics. Amazing. But Mr. Lewis has been embedded with Sam for the last 6 months. Now, we can only imagine that would have been a fluff piece with all this bullshit altruism stuff that the Bankman has been talking about. So now Mr. Lewis has a little bit of a conundrum here. The guy that he's been following for 6 months, who must have raised red flags for Mr. Lewis, has now turned out to be, well, let's just say a problem. Here's my best advice for a very successful author, Michael Lewis. Give the project to somebody else. Not Mike Covel. I want nothing to do about it. I'm not wasting one day of my life to write about Sam Bankman. But Michael Lewis should turn the project over to somebody else. Because right now, at this stage of the game, Lewis has a bias. And whatever he delivers, I want no part of it. Fun side tangent. This story will go on forever. Michael Lewis becomes another piece of the soap opera. I remind you as I go out here, stay focused on what matters in trading, the price. Stay focused on a strategy that doesn't know the scandals are going to happen, but prepares for the scandals before they happen. And trend following is the only strategy that does that. I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.